Hey, good morning. This is Mayor Valensky with Driving Markets, and obviously got the regular caveat. Anything said in this piece is purely an opinion only. I'm not a financial advisor. I'm not an investment advisor. Any money that you trade on is money in your account and belongs to you. Okay, so let's move on. All right, so the big thing yesterday was the PPI, Producer Price Index, which came in much higher than expected. And that is the wholesale measure of inflation, which means very simply, it's at the wholesale level where the wholesale delivery and the production is shipped out. There is an inflation measure, and that is the inflation measure, Producer Price Index. Okay, so let's just clarify that. That came out yesterday and was higher than expected, and probably going to move higher even more. That put pressure immediately on the Fed and the Fed rates, because now they're pricing in a 100 basis point rate increase in July at the FOMC, the Federal Open Market Committee meeting in the US in July. Now that would be one of the biggest rates in the last 40 years. So it could be a huge impact on financial markets. Now initially what happened was that markets actually went down, but clawed their way back during the afternoon session. The Nasdaq actually ended up slightly up on the day, considering it was down nearly over 200 points during the session. That is because Qualcomm has now won a contract to produce processors for smartwatches, and that pulled up the whole Nasdaq sector. And as the Nasdaq sector rised, so did Bitcoin rise, and Bitcoin closed above 20,000. Now those people who are crypto traders and all those people who are into Bitcoin, Ethereum, Litecoin, Dogecoin, etc., it's interesting because Bitcoin is hovering around the 20,000 level already for the last 3 to 4 weeks. It's either just below 20,000 or just above 20,000. So those people who are trading Bitcoin can obviously trade the range. However, the more it stabilizes at 20,000, the more it's building a base to move forward. So for the bulls, that is a great sign. For the bears, what they're looking for is more pressure downwards on high risk assets like the Nasdaq, tech stocks, and obviously cryptocurrencies. Now with the rising interest rate environment, which is already priced in to the markets, then you could be finding that we're at a short-term bottom. We could be at a short-term bottom where for the next 2 to 3 days or the next week there could be a bounce in financial markets, because it looks like everything is priced in. However, yesterday Morgan Stanley and JP Morgan came out with figures that were lower than market expectations and lower than analysts' expectations, and that pushed the banking and financial sector down. Now, considering that banks are the actual stalwart of financial markets and they're always a lead indicator, the fact that their shares and their corporate earnings are less than anticipated is not a good sign for the financial sector. Jamie Dimon said that we're going to go through economic hardships. Now, what's happening today is as the effect of what happened in January. Remember, the reporting numbers already from the last quarter. So the first quarter was based on 2021, which was a bull of a year. And then coming to 2022, things began to go southwards. Assets began to be downgraded, and now you've got the banking sector and potentially corporate earnings could dampen the enthusiasm further within financial markets. So keep an eye on that. Oil, interestingly enough, fell again. In fact, it dropped to a level of about $89 a barrel during the trading session on the back of fears of rising interest rates and obviously pushing the economies more towards recession. When there's recession, there's less demand for oil. As a result, the oil went down in price, and therefore oil is looking as an attractive buy. I'm still a long-term bull, and one of my viewers said, listen, May, you've got it all wrong. You've had it all wrong for the last 3-4 weeks. He's right. I've got it wrong. I was calling Bitcoin down to 15,000, 13,000. I was calling oil at 140, etc., etc. You're right. I'm not a prophet. I'm just giving an opinion. But my opinion is that oil is going to go to the $130, $140 a barrel. In China, you're going to have further lockdowns as the COVID-19 variant starts spreading, and that's going to frustrate the supply chain even further. Remember, inflation was and started as a supply chain issue, not as a demand issue. The demand is there because there's no supply. If there was enough supply, then demand would probably be normal levels, but demand looks exaggerated because the supply levels are quite low. Also, bond yields moved up yesterday slightly. The 10-year moved to 2.91%. Now, as rates rise, that will have a further impact on the high-tech sector. So you need to keep an eye on that. As far as foreign exchange is concerned, wow, the dollar is just rampant. It's just absolutely soaring against all major currencies. Especially highlighted is dollar yen, dollar Japanese yen, and also euro dollar. Euro dollar dropped again below the 1-on-1, below par yesterday during the session. Clawed its way a little bit up. I think the euro is a sell in my opinion. I think it's going to go to 95 to the dollar, 95 cents to the dollar, and the dollar is going to continue rising all the way through the rest of the year against all currencies, including the pound. One viewer asked, what do I reckon on cable, which is a GBP pound versus the dollar? I think it's going to float down to about the 110 level, stabilize, and then at some stage in the next 3 to 6 months, probably after 3 months, it's probably going to claw its way back up to the 130, 135 level once all the bad news is out. But Andrew Bailey, being a very weak governor of the Bank of England, is indecisive and just can't decide whether to put interest rates up at 50 basis points, 25 basis points, or put them up at all. Is actually basically useless. Anyhow, my time's up. This is Meir Walensky with Driving Markets. Hope you're well. Have a good weekend. Have a good Shabbos. Shabbat Shalom. All the best.